Welcome to Beat the Street as we take you through to the start of today's US trade on this Thursday, the 28th of December. We've got some breaking news headlines coming through in just a moment. Let's take a look at the headlines as we await the start of today's US session in 1 hour's time. After record highs yesterday across Wall Street, it's a little bit of a hesitant start in all three major indices today, but nonetheless new record highs we've seen recently on the cash session. Not quite on the 24-hour markets on the S&P 500. We'll take a look at what's happening in just a couple of minutes' time. Let's take a look as well at what's been happening with the weaker US dollar. The dollar basket is closing in on the 100 level, and it's passed down beyond the point at which we took profits on a short trade on the Dixie. I'll cover that as well in just a few moments' time in the context of this breaking news headlines. And as we continue to monitor what's happening with Apple shares, up for a second day in a row. And it certainly seems now, according to the law, the courts that have gone through the documentation relating to the alleged infringement of patents, Apple can, for now at least, resume sales of its smartwatches. We'll take a look in some more detail about what's happening now. I want to show you the minute-by-minute chart, first of all, though, on this dollar basket here, because this is moving in the wake of some economic data. It's not premiership economic data that's bound to move the markets tremendously. And indeed, we're just getting some details coming through showing the weekly jobless claims coming in pretty much in line with expectations at 1.875 million. The consensus had been absolutely on this for the money. We've got the goods trade balance coming in with a deficit of $90.3 billion. We've been looking previously at 89.8 billion, so that's not too far away. Again, ballpark figures around the sort of expectations we're getting in from the numbers. So far as the weekly jobless claims, the initial jobless claims, 218,000. Now, this is more than the previous reading of 206. We had been looking for a consensus of 210,000, not too far away, but it's the continuing jobless claims which remains pretty much unaltered from the previous month, 1.875. Now, whichever way you cut it, you can see on this chart here that we've got a drop by minute on the US dollar after the gains that we've seen. I want to show you the longer term picture because the point I was talking about in the last couple of days, and indeed I was talking about this yesterday on the Beat the Street yesterday, and you can see now we've disappeared below this line at which I took profits of 100.62. I'm now regrouping and going for this next line down here as the next line of support at 100, which would seem to be the right sort of thing. And we do have some more data coming through, pending home sales. We've got coming up at 3 o'clock this afternoon on the IG platform that could well move the markets. And that again is something worth looking at in terms of the context of what's happening with the dollar. Staying on the charts, just want to show you what's happening with the euro dollar trade, because this is what most people trade. And despite the fact we're off the highs today, the euro has struck new highs not seen in this market since the middle of July. And if you're long on this, you continue to trade with your stop loss underneath the underside of this rising line of support. And you can see clearly the way in which this market is moving. Now, in the context of some of the other charts, I want to show you what's happening. Yesterday, we saw another new all-time record high in DB closed 24-hour market highs as well. A little bit of a pullback at the moment on the Dow. Let me just quickly wind this back into 1 hour trades and show you what's been happening from the market where we've seen this market move here. That's Tuesday's close, and you can see that we are better off than we were at on Tuesday. Let me just bring that up to where we were Wednesday last night. It would be a bit more relevant, wouldn't it? There we are. In fact, if anything, we're just losing a couple of points on the close last night on the Dow. So after that record high close that we saw yesterday, a little bit of weakness going into this trading day. It's the last full trading day of the year. Tomorrow we are trading on the Dow, the S&P 500, the Nasdaq, but we are looking there at markets which are on a half day, like we have in the European markets tomorrow as well. So likely to be really thin volumes again. This is the hour by hour chart on the S&P 500, closing at a cash close record high yesterday. Not quite as an intraday record high, at 48.18 we had a couple of years ago. Again, a little bit of money taken off the table after what was a very strong day on the upside yesterday. The Nasdaq a record high yesterday, and indeed as we're speaking, we are knocking on the door of new record highs as well for the Nasdaq. So you can see that things are moving up today, and we'll continue to monitor what's happening here with the pending home sales at 3 o'clock this afternoon, expected to rise by 1% month on month. Last month, pending home sales fell by 1.5%, their lowest since records began in 2001. Now let's move on and take a look at some of the stocks to watch. In fact, there's just one stock I wanted to follow up on, and this was something that happened yesterday. So to a degree, it's all pretty much in the bag. I want to show you the chart for Apple because it's won its appeal. It did so yesterday, and for now can resume sales of its smartwatches. Now you can see we're up for a second day in a row on the IG platform. We are expecting a stronger start. It's only by a very small margin. But this is going to be one of the stocks that's going to buck what looks like potentially to be a little bit of a downward trend on some of the markets, although the Nasdaq, as I said, knocking on the door of record highs again. The ITC, the International Trade Commission, had previously ruled that Apple had infringed the patents of Masimo, a company specialized in medical monitoring. Masimo has accused Apple of hiring away its employees to steal its pulse oximetry technology and incorporate it into Apple watches. This measures the amount of oxygen in blood flow around our bodies. Now, Apple countersued yesterday, saying that Masimo was maneuvering to clear a path for its own smartwatches so that Apple could be cleared from the decks for Masimo to make money. Masimo declined to comment on the court decision yesterday. Its shares down 4.6%. Just quickly go and take a look at what happened there yesterday. This is not an all-session stock, so we don't know how it's going to open today. I suspect there could be a bit more pressure there. Just quickly going back to Apple, because it is of interest in the longer-term picture. One, because of its sheer size. This red dotted line up here is the point at which it turned into a $3 trillion company for the very first time. We saw that back in June this summer. But this blue box represents the gains that we've seen from the lows, from the very low point we had at the beginning of the year on the first trading day. And people were buying this pretty much straight out of the dock on that first trading day. 60.72% of the gains that we've had this year in Apple stock. And the market moving a little bit away from that recently, but nonetheless going into the back end of the year, holding on to much of the gains overall. So that's where we are in terms of Apple and Masimo, looking potentially for a slightly stronger start when Apple gets underway. Now, there are no other stories to tell you about in terms of some of the corporates to watch out for. What I want to do is to bring up a chart for oil, because this is another thing we're looking at in the context of US inventories. Second day in a row of losses we've got at the moment for Brent, and it's the same sort of thing for US crude. Brent trading now below that $80 barrel level. We're now down below $75 a barrel, again on the WTI. This is an interesting thing, this retracement that we've got here in the rally that we've seen recently. If we now get a further easing of the geopolitics and we get more oil coming through the Red Sea, with the Houthi rebels pulling back, if that's the position, I could see this going further on down, possibly even testing this low line that we saw here back on the 13th of December. Now, yesterday, crude oil inventories rose by 1.84 million barrels last week, according to the American Petroleum Institute. In 2023, crude oil inventories have risen by just over 21 million barrels, showing that there is more oil around in the market. And this latest rise in inventories just goes to show and the reason why we got this little bit of a pullback in the price of oil. Not necessarily directly connected with what's happening in the US markets, but I do want to show you what's happening with gold, because this to a degree is related to what's happening with that drop in the price of the dollar. Currently trading at $78 above the 2,000 level. In today's session, we've seen the highest print we've seen since midway through Monday's trade on the 4th of December. For me, this remains the price target at 21.21, despite a little bit of a pullback today. So long as we continue to see a dollar which is drawing down, I think we're likely to see further downside for the price of gold. If you want to know where to put your stop loss and you're trading this on a trend, stop loss goes underneath the underside of this rising line of support. You have to work out where that is, but it'll give you a stop loss at around about the 2050 level. 2078, 2121 is the target. That's it. So expecting a slightly weaker start to both the Dow and the S&P 500, though tech stocks edging up to new record highs again, so potentially a higher start there. Apple's certainly one of those stocks I think that could well lead the way on the upside, along with others going into the back end of the year with its last trading day, full trading day of the year on Wall Street, tomorrow being a half day. That's it from me. I'm back at 4 o'clock this afternoon on the IG platform, 4 o'clock UK time, as we look ahead to Friday's trade, and just a couple of data points to watch out for. One of those will be what's happening in the markets ahead of the Chicago PMI data out on Friday and the Baker Hughes rig count. My colleague Angeline Ong will be on deck tomorrow morning at 9 o'clock, where we merge the early morning call and charting the markets. And she'll be looking at the start of the half day's trade on the London markets at that point. Have a good evening. And for those that we will meet again at the other side of the new year, have a good New Year's weekend. And I'll see you back on the early morning call on Tuesday morning at 7:30 a.m. UK time.